guys, Robert the Realtor here, back with more consumer guides from the National Association of REALTORS settlement. They call it Get the Facts. I think there's about 6 more, so I'm going to bore you with each of these just because I want to become a specialist in all areas of real estate. So today we're actually going to talk about mortgages and financing. So like I did last time, I'll read what they say and then decipher it to English. So buying a home is one of the largest personal and financial decisions you can make. For many buyers, the process includes finding a loan that will help you pay for your home over time. As an agent who is a realtor, can help you learn about your options. Here's what you need to know. What is a mortgage and how do I get one? A mortgage is a loan offered by a bank or lender that lets you borrow money to purchase a home and repay over the time with interest. Mortgages can take many forms. One of the most popular options is a 30-year fixed rate mortgage. Many factors can affect mortgage options available to you, including your down payment, personal finances, meaning credit score, income, existing debt, employment history, and other factors like government policies, current interest rates, and other lenders you are working with. Certain buyers, like first-time home buyers and veterans, might be eligible for special financial assistance programs, which we'll talk about here in a few minutes. So what is a mortgage? It is the money you would borrow to buy a house, and they are correct. How do you come up with, how do you get qualified for? I have a couple of different mortgage brokers I can put you into contact with. They can go over that, but I know that like your debt to income ratios play a factor. Your credit score plays a factor. Your debt to income would have to do with your income, obviously. Your employment history, and as an example, as a self-employed person at one time in my life, I know that they had to show 2 years of self-employment to qualify. Now those may have changed, but I'm just kind of using that as an example. So that's a little bit about a mortgage. What type of loans are there? Factors like where you are searching for a home and how long you plan to stay in your home will help determine which loan best suits you. Some options include fixed rate mortgage, which will be the most popular. That's an interest rate monthly payment for the life of the loan, which is typically 15 or 30 years. So typically that fixed rate mortgage is your principal and your interest. And then if you have escrow, it'll be your insurance. We're not talking about that. Adjustable rate mortgage. ARMs may offer interest rates that are lower that you can get for a fixed rate mortgage for a chunk of the life of the loan, such as 5 or 10 years. After that point, interest rates are subject to change approximately once a year based on market conditions. So adjustable rate mortgage could be like a 5-year set rate, but then after that, that mortgage could increase, that interest could increase every year or change every year. So there may be suitable times for that. Most of the time, the fixed rate mortgage is what you want. What is a down payment, and how much will it be? Some lenders require buyers to pay a percentage of the home's purchase price up front, which is known as a down payment. Your down payment can vary substantially depending on your mortgage agreement. Typically, if you pay more money up front, your monthly mortgage payment will be lower. Many local governments and nonprofit organizations offer down payment assistance, grants, and loans if you meet certain requirements. Ask your agent to reach out to your local realtor association for recommendations, guides on what's available. So the down payment is the amount of money that you would put down when purchasing the home. Sometimes it's a certain percentage. Some offer, like this says in here, you'd want to talk to a mortgage broker about possible grants or payment assistance, down payment assistance programs. They could help you with that. So the down payment is how much you put down on the house, and then obviously that would reflect on your monthly mortgage payments after that. So what is the difference between conventional and federal home loans? Conventional loans are financed by private lenders such as banks, credit unions, and mortgage companies. They require stronger credit and higher down payments, but may offer better rates. Federal loans are government-backed, meaning lenders carry less risk and can pass savings on to eligible borrowers who may not have pristine credit. Some federal loans include Federal Housing Administration, FHA loans, They cater to first-time home buyers and have flexible requirements and down payment options as low as 3.5% depending on your credit score or debt-to-income ratio. Department of Veteran Affairs loans, so also known as VA loans. If you served in the U.S. military, you are eligible for a VA loan with no down payment and no mortgage insurance requirements. Thank you for your service. This could be a good option for you. U.S. Department of Agricultural Loan, the USDA Rural Development Loan, USDA loan, is designed for families purchasing a home in rural areas, requires zero down payment, and offer discounted mortgage interest rates. On a realtor side, the USDA and the FHA loans are a little tougher, not for you to get, but to find the right home. They have certain requirements that need to be met in order for that loan to be processed, and that would be something you could talk to your realtor or your mortgage broker about at the same time. Are there other ways I can lower my out-of-pocket cost? Yes, you could. That would be something you could discuss with your mortgage broker. I've already talked about seller's concessions. That is one way that you could do that in one of the previous videos. So again, some of these may be boring, but I want to have them out there for you. And I went over my 5 minutes time limit that I usually use. But again, this is a little bit about mortgage and financing. So if you like these kind of things, make sure you like, subscribe, or comment, and look forward to doing about 6 or 7 more of these. So appreciate your time, guys. Robert the Realtor.